time for your weekly financial workout with your elite personal trainers, Ryan and Bob Payne, guiding you on how to build a stronger and more robust financial plan. So get ready. We're about to pump you up. Live from the greatest city in the world, this is No Pain, No Gain.
Good morning. This is No Pain, No Gain Financial Radio. I'm your host, Ryan Payne, president of Payne Capital Management, along with Chief Investment Officer, my father, the man with the plan, Big Bob Payne. Good morning, Dad. What's shaking on this Sunday? My thoughts and prayers go out to all the people in Houston have been displaced by this just unbelievable flood.
Yeah, it really is, right? It's a flood of the century for the poor folks in Texas. It just goes to show you how important it is for family and community. And I just thank God that our family's healthy today. And my prayers and my thoughts are with those poor folks in Texas.
Yeah, absolutely. Absolutely. Mother Nature is a powerful force. Well, we have a great show for you this morning to help you on your path to financial freedom. We're going to talk about famous last words, or I should say maybe dangerous last words, phrases that you don't want to be caught saying when it comes to your financial planning. We're going to talk about some old proverbs that we all know really, really well and how you can apply them to making better decisions about your money, along with this week's financial pornography, what was out there in the news media that you need to stay away from, and of course our Spotlight segment where we're actually going to review a real retirement plan, highlight some of the flaws or mistakes that you need to avoid with your own planning. So let's get right to it. Let's talk about famous last words. Hopefully your famous last words in life won't be, "Hey y'all, watch me do this."
I hope
Bad joke. In the financial world, there's quite a few phrases that you don't want to be your most famous last words, and let's discuss a couple of these that you don't want to be caught saying. The first one is, Bob, I told myself a few years ago that I'd get out of the market if I ever recovered what I lost in 2008. But now I think I'll just keep doing what I'm doing.
Well, Rod, the definition of insanity is doing the same thing over and over again, expecting a different result.
Yes.
And it definitely sounds like an insane statement, and it really is, because it's there are two types of people that put money into the stock and bond market. One's called a investor, which we all hope you are, and the other is a speculator.
Right.
Now, we come down to the Shore House during the summer. We could see these beautiful shiny buildings on the coast and in Atlantic City. And I don't know what they look like on the inside because I've never been in there, son. How about you?
Well, I have been inside those casinos, and it's a little depressing about 3 a.m. With everyone playing those slot machines. But, my philosophy has always been if they're building these multi-million-dollar casinos, it's really because I'm going to win when I go to the casinos.
Well, the problem is this. If your attitude towards your portfolio is all or none, then you're a speculator, you're a gambler. And there's no way in the world anyone should have all their money in high-risk assets. And, and that sounds like what happens when you're trying to break even. See, here's the thing. If you follow a strategy, a disciplined strategy, and you stick with it, you always make money. Now, we know the market had a recent peak back in October 2007. It's almost 10 years ago. Can you believe that?
No, it's crazy to think that it's been a decade and markets are much higher today than they were even at the peak in 2007, which just goes to show you. I think I joked about this last show, but if you could just gone away in 2007 before the market crash and then come back 10 years later, you would have seen your portfolio a lot higher and probably had to deal with a lot less emotional pain, no pun intended, watching your portfolio fluctuate over that time frame.
Yeah, but it was a fantastic lesson because the point of fact is that you need to live off your portfolio once you're in retirement. And fortunately, our clients follow a more balanced strategy. And if you had a portfolio that was 60% in a diversified equity portfolio and 40% in bonds, how long do you think it took for you to go from peak to trough to breaking even, as we said earlier in the show?
Right. So all the money you would have lost from 2007 into 2008, or I guess the bottom was 2009. It took you, my guess is, over 24 months to recover all your money from what you would have lost over that time frame.
And actually from the peak to, recovering all your money, getting back to where you were at the peak, it took 3 years. But meanwhile, our clients that were retired were able to live as comfortably in retirement as they were before the market dropped because they had a diversified portfolio and they had income. So they were living high on the hog during the decline. Nothing changed in their lifestyle. Now, since October 2010, what happened to those same portfolios, son?
And we saw, obviously, everything is just ramped up. And we've been in a bull market for the last couple of years, so it's been basically straight up for quite a while.
How about
now.
their portfolios doubled? So they went from living high on the hog to living higher on the hog. That sounds like a pretty good strategy to me.
It does, but I think the mistake that we make is, we saw our portfolios take a huge hit in 2008, and then we did see this recovery, but we've never adjusted our portfolio to being 10 years later, because most likely if it was 10 years ago, you were much earlier in your working career. You had a lot more time to make it up, so that, if you saw a 40% decline in your portfolio, you could continue to work and add money to it. But now you're probably a lot closer to retirement or even in retirement, and you just can't afford the same kind of risk that you had back then. Going back to your quote, Bob, the definition of insanity is doing the same thing over and over again. And I see this with your portfolio is you're deemed to repeat the past if you don't make adjustments now. So, one of the things I don't like in investing is if it ain't broke, don't fix it. You have to be proactive with your investment portfolio, not reactive. And the question you need to ask yourself is, do I still have the same wealth accumulation portfolio I had 10 years ago when the market declined? Because when it happens again, you're going to see the same results. So if you're 10 years closer to retirement, you're in retirement right now, you have to start thinking about restructuring your portfolio while things are good, right? The best time to make changes is when the wind's at your back, is creating more of a pension-like or a wealth distribution portfolio so you're better protected next time we see a market decline.
Ryan, it's so well said, because when you look at a portfolio is made up of two things. It's made up of capital gains and losses, depending on the day, and income. And, half the return over your lifetime comes from the dividends and the interest that your portfolio generates. And income is so much more dependable than capital gains. So you need to have a cash flow to sustain you while you're waiting for the inevitable increase in the portfolio. So I think the lesson learned is that it's not about making money every day. It's not about being right. It's about, growing slowly over time. And, the next dip's going to happen. We're going to have corrections in the market. The mindset should be, not if we're going to have a correction, is what are you going to do to be proactive in rebalancing your portfolio to take advantage of the next inevitable up?
Yeah, exactly. If you're sitting there saying yourself right now, I need to make sure that I have a wealth distribution portfolio. I have a portfolio that's retirement ready. Here's your shot to do it. If you're one of the next 10 callers and you have over $200,000 saved for retirement, Bob and I will run a full review for you, our total financial master plan, and we'll do it with no obligation or cost. That's a full review that'll look at all these issues. We're even going to look at taxes. If you bring in last year's tax return, we'll have a CPA review it to make sure you're not paying unnecessary taxes. And if you bring in your wills, trusts, dust them off from the basement, we'll actually have our estate planner review those to make sure your estate plan is up to date and any changes you may want to make to your wills and trusts. And finally, bring in all those investment statements from all the different financial institutions where they're held. We're going to combine them all together onto one simple 3-page document, our investment analysis spreadsheet, and we're going to make sure that you are properly diversified. Do you have a wealth distribution portfolio? Is your portfolio retirement ready? We're going to point out all the pitfalls in your portfolio. We're going to look at income. Income is critical in retirement. We're going to show you how to increase or optimize the income on your portfolio. And we're going to look at fees. Are you being overcharged on your investments? You might be, you might not be. We're going to point out all the costs, including those hidden fees you don't know you're paying, to see if we can reduce the overall cost of your portfolio. And then we're going to tie it all together into one total financial master plan to determine, is your money going to outlive you, or are you going to outlive your money, utilizing strategies we've literally worked on for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
So don't delay. Give us a call at 844-PLAN-NYC, 844-752-6692. If you're one of the next 10 callers and you've saved over $200,000 for your retirement, our team will run for you your own personal, total financial master plan. No obligation and no cost. just give us a call. 844-PLAN-NYC. It's 844-752-6692. This is Bob and Ryan Payne at No Pain, No Gain Financial Radio.
For all the latest information and news that you need to retire successfully, make sure you go to BeBullish.com. That's BeBullish.com.
It's time for the weekly No Pain, No Gain market update with the team at Payne Capital Management here in New York City.
Good morning. This is Bob Payne, Chief Investment Officer here at Payne Capital Management, but mostly known as Ryan's dad. Well, the market stayed strong this week as the Commerce Department reported that the economy grew faster than initially thought in the second quarter. And they revised their estimated growth of GDP to 3%, the best quarter since 2015. And retail sales and business spending data so far suggest the momentum was sustained at the start of the third quarter, with some analysts now estimating growth for the third quarter as high as 3.4%. Now, other data released was the August jobs report on Friday, as non-farm payrolls increased by 156,000 versus the estimated number of 180,000 jobs. Now, the unemployment number rose to 4.4%, and the labor participation rate stayed flat at 62.9%, and average hourly earnings rose just slightly. So after all the revisions, job gains have averaged 185,000 per month over the past 3 months, and that meets market's expectations. Now, another leading indicator of global growth has been the recent surge in industrial metals, things like zinc and aluminum and palladium, and most importantly, copper. Now, copper is known on Wall Street as Dr. Copper. It's the industrial metal that's reported to have a PhD in economics because of its ability to predict turning points in the global economy. Now, because of copper's widespread application in most sectors of the economy, it's in your home, it's in the factories, it's in your electronics. Demand for copper is often viewed as a reliable economic indicator of economic health. Now, copper prices go hand in hand as a bellwether of the health of the Chinese economy. And perhaps this is why the emerging markets continue to lead the world in market performance, now up over 25% for the year. That's twice as much as the not too shabby 12% return for the U.S. S&P 500 index. And with that, I'd like to wish you and your family a healthy and relaxing Labor Day. Hey, if you're sitting here wondering, why isn't my portfolio participating in this big, booming global bull market? Why sit there and wonder when you can know? Give us a call at 844-PLAN-NYC. That's 844-752-6692. This is No Pain, No Gain Financial Radio.
We are going to do up down until blue is no longer tired and thirsty.
To get in shape, head to the gym. To get financially secure, keep it tuned here to No Pain, No Gain.
It's Ryan Payne, Bob Payne, No Pain, No Gain. One of Bob and I's goals is to make sure that we educate you not only about your investing, but also about making all the best financial planning decisions you possibly can as you move near retirement and you're in retirement. And one of the biggest decisions you're going to make is maximizing your Social Security. So Bob and I have put together a guide so you can make a better decision about your Social Security called Maximizing Your Social Security. So if you send a message to 555-888 and put in the message field bullish, that's BULLISH. Again, if you text to 555-888 and put in the message field bullish, BULLISH, you can get access to our Maximizing Your Social Security guide to help you just to make sure that you do make the best decision, because there's a lot of ways to take Social Security. We want to make sure that you maximize it for yourself and your family. So one more time, text the word bullish. That's BULLISH to 555-888. In this segment, we want to talk about financial proverbs. There are plenty tried and true maxims that aren't necessarily meant to be about money, but we can easily learn a financial lesson from them anyway. Bob, I'm going to give you a list of proverbs, and you need to tell us the financial wisdom that's hidden within. All right, ready?
I'm ready.
A bird in the hand is worth two in the bush. How can we apply that to our finances?
Well, that's a great proverb. And let me ask you a question, Rye. When do people invest heavily in technology stocks? When they're cheap or when they're in a bubble?
Always near the top, like we see right now with a lot of the money going into Apple, Amazon, or the proverbial FANG trade. All the money's going to the same place when prices are already high.
When do people speculate on Las Vegas and Florida real estate? When it's cheap or when it's in a bubble?
When it's in a bubble.
Why do they do that?
I think it's the herd mentality. When you see that everybody else is getting into something, we don't want to miss out. It's a psychological type of issue that we have as human beings, as investors.
Yeah, I don't know what it is. Is it jealousy? Is it the media? Is it the scarcity that, oh my goodness, if I don't get in, there's not going to be any left? Not really sure. But one thing you always talk about week in and week out is that to be successful as an investor, you want your money to outlive you. That's a pretty simple directive, don't you think?
I think, we're from Philadelphia, Bob, so we like to keep it really simple. So yes, I think a simple goal of letting your money outliving you is the right goal.
So you really don't have to have the best investment in your portfolio, do you?
No, absolutely not. Absolutely not.
Well, here, I'm going to take you back. I'm going to give you an opportunity to go back in my Wayback Machine. And I'm going to take you back to 1999. I'm going to give you an opportunity to invest $1 million. Now, I'm going to give you two choices. And The only requirement is you need $40,000-$50,000 a year to live on. So you got to make sure that this money generates $40,000-$50,000. Is that hard with $1 million portfolio?
$40,000-$50,000 a year is not, well, yeah. I mean, to do it consistently, that's a 4 or 5% return a year. So
all right.
You have to.
Here, I'm going to give you a choice. You can put it all into Amazon.
Okay.
All right, $19.99, or you can put it into a diversified portfolio, high quality real estate investment trust paying dividends. And even better yet, I'm going to give you a little more information. Over the time frame from 1999 to today, your Amazon investment is going to be worth $16 million, where your real estate investment portfolio is only be worth $14 million. Which one do you want?
Well, I'm in the greedy side of me says go for the Amazon stock and have it worth $16 million.
Well, here's the problem. You still got to live on the dividends. What dividend does Amazon pay?
0.0.
Now, the portfolio of real estate investment trust not only paid you a decent dividend, but they increased their dividend every single year over that 18-year period. And what you really had to contend with was the very first year you put your $1 million into Amazon. What would you guess it was worth 12 months later?
I mean, I know Amazon took a huge hit in the late 90s into that 2000 bear market. So I'm going to say it went down to $400,000.
How about $85,000?
Oh, wow, that hurts.
So you wouldn't have made it to retirement because in 2 years you would have used up whatever principal you had left just on your living expenses.
Yeah, hence diversification. I mean, it's so critical not to have your proverbial all eggs in one basket. Or in this case, a bird in hand is worth two in the bush. Don't swing for the fences. Is that what you're saying here, Bob?
I'm saying a bird in the hand is that dividend and income stream is worth its weight in gold. It's so much better than speculating on a technology stock. And that's what investing is really about. That's really what we talk about almost week in and week out.
Yeah, beautifully put. Another proverb, or we could turn into a financial proverb, is a rising tide lifts all boats. And I'm going to chime in here for a second because this is one of the main reasons why we always talk about how money managers, so when you own mutual funds and you own these separately managed accounts, and when your broker's talking about he has this special manager that has a special portfolio that they run that's going to outperform the market. Well, one of the dirty secrets about Wall Street is when the market goes up, all stocks typically go up. So even the really lousy ones go up as well. And a lot of times the lousy ones outperform the really good quality companies. And this is one of the reasons why money managers, for the most part, can't outperform. It's because basically, even if they're picking stocks they think are going to do better, it doesn't really matter because the market doesn't really discern. So, from my perspective, it's like just own the whole market because you don't need that be that smart to pick the winners from the losers, as is always kind of touted on Wall Street.
Well, the problem is with that strategy, when you have a rising tide lifting all boats and junk goes up with quality, what happens when the tide goes out?
You can see who's been swimming naked.
I love that quote.
Another proverb that we can apply to our finances is don't put all your eggs in one basket. What's that mean to you, Bob? Sounds like diversification to me.
Well, it is diversification, Ryan, and we just talked about it. I mean, don't put all your money into Amazon. It sounds great. I mean, the Wall Street Journal and all these other newspapers been running article after article about how much money you would have made had you bought the new issue of Amazon. But when you lose 90% in 1 year, typically you don't stay invested. I don't care how strident you are in your view. But if you go back and you just look what a balanced portfolio has done over the last 10 years, it's returned about 7%. That's dividends and interest and appreciation. That means in 10 years, you've doubled your money. Now, take a look at your portfolio today. If you had double that amount of money in 10 years, would you be better off? Or would you be thinking, oh, maybe I have to get a big winner in my portfolio and have all my eggs in one basket? Diversification, diversification, diversification. Can't say it enough. But it means truly diversification. And what we see is most people do not diversify properly. Why is that, Ryan?
I think it's a good point. I see this a lot with individual stocks. I was talking to an investor the other day who had all his money in one company, loved the company, did really well with it over all these years. And I went back and historically just looked at the returns on a diversified portfolio, and the returns were identical. But going back to your Amazon example, but when you look at the risk and you look at just the headaches of one company, what can happen to one company over any time frame, is it really worth it to have that extra unnecessary risk of one company, even if it's the greatest company in the world, even if the company could go to zero, or even like Amazon, you could just go through a period where the stock just gets hit mercilessly. Think about how hard those stocks were hit back in 2000 and 2008, whereas a diversified portfolio, you're always going to have some level of consistency. So even if the return's the same, the quality of the return of a diversified portfolio is so much better because, your point, Bob, you have the income coming off that portfolio that you can live on, and you don't have to stomach the same kind of pullbacks or see your portfolio go down with the same kind of volatility when you have your money well spread out.
Just like in the Navy, Ryan, you have to have a fleet, but you have to have the right boats in the fleet. And if you're wondering, do you have the right boats in your fleet? What we'd like to offer you, if you're one of the next few callers and you've saved over $200,000 for retirement, my son and I will run for you our renowned Total Financial Master Plan. Now, there's no obligation, there's no cost. And if you're one of the next few callers, here's exactly what we'll do for you. We'll review your tax return. Better yet, we'll have our CPA partner review your tax return to make sure you're utilizing every tax benefit that's available to you under today's tax code. Secondly, we'll look at your estate plan. We want to be certain that your estate plan is not an IOU to the IRS. We hope not. And lastly, we're going to review your fleet of investments. We're going to take all of your statements and break it down into a simple investment analysis spreadsheet. A 3-page document, not a big book that you can't read. It's a 3-page document that compares apples to apples, tells you how you're performing, tells you whether you're diversified, tells you how much it's costing you, to own that portfolio. And we're going to take a hard look at whether or not you're optimizing the income from that portfolio and make it more dependable. And finally, we're going to tie it all together into your own personal Total Financial Master Plan and answer that age-old question: are you going to outlive your money, or is your money going to outlive you? Utilizing strategies that my son and I have now been perfecting for over 4 decades. That's right, 40 years. We want to help take your family from your personal point A to your goals, to your dreams, to your point B with the least amount of risk and as much certainty as any fiduciary can provide.
So don't waste time. Give us a call at 844-PLAN-NYC. That's 844-752-6692. Be one of the next few callers with over $200,000 saved for retirement at 844-PLAN-NYC. That's 844-752-6692. Here's your shot for a second opinion at 844-PLAN-NYC. That's 844-752-6692. This is No Pain, No Gain Financial Radio.
At Payne Capital Management, we understand how crucial Social Security is to your retirement. However, Social Security is confusing, and there are many ways to claim your benefits. That's why we've developed 10 strategies for maximizing your Social Security benefits. If you text the word bullish to 555-888, we'll send you a link to download your free copy. Simply text the word bullish to 555-888. And you'll receive a link to register. The Social Security system is complex. Make sure you're making the most of your benefits. Get started today by texting the word bullish to 555-888. That's BULLISH to 555-888. Text the word bullish to 555-888.
It's time for Financial Pornography of the Week. This is where we scour the daily financial news and call out the biggest offenders of offering obscene and profane financial guidance to help you protect yourself from making any ill-advised financial decisions. Bob, what's happened in the world this week of financial pornography?
Hey, Rye, it's the same as we see every week. You know, all these outlets, all they sell is fear and uncertainty. And the latest thing they're telling us is that the government's going to shut down, and it's going to have this enormous economic impact. Do you know how many times we've had shutdowns since 1976?
I'm going to say we've had one.
We've had 18, believe it or not.
Oh, I'm way off.
And
never mind.
Guess how much the S&P has dropped on average on those horrible government shutdowns?
About 2%. I know it's a very, very small percentage is my recollection.
0.6%.
Wow. So it's a non-event, basically. An absolute
Well,
non-event.
it is. Political showdowns, they tend to be short-lived. They generate little permanent effect on the stock market. And, you know, so they're talking about what's going to happen if they come to some budget impasse. And they're also talking about what goes wrong if tax reform doesn't get passed. I'm not certain, but how many of the new administration's reforms have been passed so far?
Well, so far it's been like 0 for 2 or 3, which is completely counterintuitive because remember back in November, everyone was pointing to the financial pornography channels, even into this year, were pointing to the fact that the reason we're having this huge market rally is because of the anticipation of all these bills that are going to get passed on everything from the Affordable Care Act to infrastructure spending to lower taxes, and we've seen none of it. Absolutely. And the market is at close to all-time highs.
Well, there's a strategist out there by the name of Tom Lee, and he's been kind of a perma-bull the last couple of years. You know, when the market was churning in 2015, they had him on the financial pornography channels a lot, and he's been very bullish. He's been very right. So they asked him, you know, if something goes wrong with tax reform, could that be the catalyst for a market sell-off? He said, you know, in my humble opinion, it's unpredictable. He said, actually, we don't know how the market will react to anything. And I think that really sums it up, don't you?
Yeah, pretty much. Exactly right. And that's, another reason why we say it all the time, but it's about time in the market, not timing the markets. And whatever's going on Capitol Hill has very, very low relevance to what's going to happen in your portfolio, which is contrary to popular belief, but statistically speaking, 100% true.
So true. So what did you find this week in the world of financial pornography?
Well, this is accumulation or a culmination of a lot of the questions that I've been getting recently. And that question is, you know, because gold has been going up incrementally over the last couple weeks. And I think with all the fears geopolitically going on, the question I've been getting for about portfolios, Bob, is do we need to put gold in our portfolio? And whenever I have a lot of clients and a lot of articles out there about why gold is a good thing, I start getting suspicious because...
Well, the hard thing I have about gold is, you know, I've been doing this for 42 years, and I've had that question over and over again. And, you know, when I investigate gold, first thing I realize, it's really heavy. It's hard to carry around. So you've got to store it somewhere, and that costs money. And then when I look at my portfolio of financial assets, I see dividends and interest that can pay my bills with. And I look at gold's yield, and there's none. And the last thing is, I tried to eat it. It doesn't taste very good. So I've been kind of anti-gold for 40 years, and maybe I've been right.
Well, I think the big one, too, is we talk about this all the time, but dividends are so important in your portfolio. Earning cash flow in gold creates no cash flow. And it also reminds me of one of my favorite Warren Buffett quotes that Bob actually sent to me earlier this week. And this goes back to when gold prices were at an all-time high. And the quote from Warren Buffett was, "For what that's worth at current gold prices, you could buy all, not some, of the farmland in the U.S. Plus, you could buy all of it, based on the price of gold. The amount of gold right now that has basically been mined." I should put that caveat out there. Or you could buy 16 Exxon Mobils, plus have $1 trillion for walking around money. Or you could have a big, huge cube of metal, which produces nothing. So from a rational standpoint, there's no practical use for gold except for maybe, Bob, you can buy a couple nice gold chains and a gold watch. And I don't know how practical that is. Or again, you could have income-producing investments. And again, as an investor, what do you prefer?
Well, as an investor, if I could have all the farmland in this country, I'd have all the food I could ever eat. If I owned 16 Exxons, I'd have all the income I could ever need to live on. Man, that's not even a no-brainer. There is no choice. I mean, gold is, I don't know what it is. It's just, something that people run to when they're fearful. But I've never seen where it makes a practical investment strategy in anyone's portfolio.
The only caveat I'll put out there is owning a basket of what we call commodities, which are physical assets. So owning physical assets like gold, silver, agriculture, oil, energy in your portfolio can be what we call a hedge. Because a lot of times historically when things like the stock market are going down, a lot of times you'll see things like commodity prices go up. So having a basket of commodities as a diversifier in your portfolio can make a lot of sense. But yeah, to own gold as a standalone investment really has very little practical value as an investor. And if you're sitting there thinking to yourself, I need a real strategy that encompasses my goals, a real strategy that produces income, a real strategy that's retirement ready, here's your shot to do it. If you're one of the next 10 callers and you have over $200,000 saved for retirement, Bob and I will run for you our total financial master plan, and we'll do this with no obligation or cost. That's a full review that encompasses all of your financial issues. So that means taxes. If you bring in your last year's tax return, Bob and I will have our CPA partner review it to make sure you're not paying unnecessary taxes and you're optimizing your portfolio to create a tax-free retirement income stream. We're going to look at your estate plan. If you have your wills, trusts, they were updated 10 years ago. We'll have our estate planner review those to make sure they're up to date, what changes you may want to make sure that is set up correctly. And finally, if you bring in all your statements from all the different financial institutions where they're held, that's your IRAs, 401ks, brokerage accounts, annuities, we're going to put it all on one simple spreadsheet, our investment analysis spreadsheet, and we're going to analyze everything. So we're going to look at income. Can you increase the amount of income on your portfolio? Income is critical for retirement. We're going to show you how to optimize it. We're going to look at fees. Are you being overcharged on your investments? What are you paying in those mutual funds, those annuities, insurance products? We're going to break down all the fees, including the hidden costs, and see if we can reduce the fees on your portfolio. And then finally, we're going to look at diversification. What pitfalls, what risks do you have in your portfolio? Should you be owning gold in your portfolio? What should you own instead? And then we're going to tie it all together into one total financial master plan to determine, is your money going to outlive you, or are you going to outlive your money, using strategies our family has literally worked on for 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
You've put this off long enough. Now's the time to call. 844-PLAN-NYC. That's 844-752-6692. If you're one of the next few callers, you've saved over $200,000 for your retirement, we'll run for you your own personal, total financial master plan. No obligation, no cost, no strings attached. Just pick up the phone, 844-PLAN-NYC. That's 844-752-6692. This is No Pain, No Gain Financial Radio.
Time for some New York City trivia.
Hey, I'm walking. good head.
Did you know that it can cost more than $280,000 to run a hot dog stand per year in Central Park? Speaking of hot dogs, keep listening to No Pain, No Gain and make your retirement plan a wiener. Gosh, I'm sorry. I meant to say a winner.
It's No Pain, No Gain, financial radio. Bob and I's goal is to educate you, make sure that you're as retirement ready as possible. You make all the best decisions when it comes to your investments, making decisions about your retirement planning, and just filter through all the bad information that's out there. And one of the biggest decisions you're going to make is going to be Social Security. And maximizing that for you and your family is going to be one of the more important financial decisions. So Bob and I have put together a guide maximizing your Social Security that you can download. You just need to text to 555-888, put in the message field bullish, that's BULLISH. You'll get a response, put your information in, and you can download our Maximizing Your Social Security Guide. Again, all you need to do is text to 555-888, put the word bullish, that's BULLISH, into the text message field, send the message, you'll get your instructions back. You can get our Maximizing Your Social Security Guide, and it'll help you educate you a little bit on trying to make the best decision because there's a lot of ways to take Social Security. You really need to make sure that you do it right. And if you ever want to talk to Bob or I, you can always email us at questions@bbullish.com. And Bob and I are always happy to answer your questions. And you can check us out on the web at bbullish.com. That's bbullish.com. And every week as we go through our questions and we find some really good ones, we'll answer them here right on the show for you. And this week, like every week, we did get some pretty good questions. And the first one comes in from George. He's on the Upper West Side, Bob. He writes in, Bob, I'm doing really well in my 401k right now, but my IRA isn't doing as well. Do I need to drop the advisor who manages that account and just do it myself?
Well, perhaps, George. I mean, when you look at your 401k, it's generally an investment portfolio or investment menu that's very limited because you have a company that wants to keep costs down and they don't let you have all the plethora of investment products that are available out there to you in an IRA. So maybe you were just lucky, maybe you weren't, but it really doesn't matter. What you need to do is do a hardcore analysis. Every portfolio you have, whether it's a 401k or an IRA or a Roth or your personal account or a joint account, every dollar should be managed in concert with every other dollar. You know, all risk and return should be balanced against each other. You shouldn't have all your risk in one account and all your safety in another account. So the key is to take a look at that portfolio in a holistic fashion. Now, Rye, we just added a new feature for our clients, which allows them to see all of their portfolios in real time, daily, no matter where that money is custodied. What a great service is that?
I'm glad you brought that up, Bob. Our new 360 portal we actually built now so that you can log in and you can see all your accounts in one place, completely updated every single day. So no matter if it's in your 401k that's held over with Fidelity, and you maybe have a Merrill Lynch brokerage account over here, but to be able to log in every day and see all your accounts updated, then you can really see, do you have all your eggs in one basket? How diversified are you when you're running those wealth projections and things like that, and having all your legal docs in one place? But an awesome new feature that we've just put in place for our clients, and I think that's such a valuable tool to have to keep on top of all your finances in one place.
I mean, it's a real game changer to have a real-time total financial master plan that you can go up every day and see exactly how you're allocated, if you're in balance with your strategy, what are your shortfalls towards retirement, are your assets titled properly? If something happens to you, just think about it, right? You know, I've been in the financial services industry for 42 years. Your mom's been in it with me, but she doesn't pay attention to the accounts like I do. And it's just the way it works. But, you know, if I got ran over, if I leave God's green earth tomorrow, all she has to do is go on to the Payne family portal, and she sees where every dollar is, where all her money is, where all the checking is, where the estate plans are. All she has to do is pick up the phone and say, hey, execute on the plan. I mean, what a great, valuable service, you know, to all of our clients, because in every relationship we see there's one person, you know, who really focuses on the finances. And we see absolute mayhem when that person passes away because the remaining spouse rarely knows where anything is.
Yeah, and never mind just your spouse, but what about the kids? Like, for instance, God forbid something happened to you, Dad, and I was able to help Mom by going into that portal and being able to say, hey, this is what we need to do now. So, just using technology and the way technology is right now, you want to have a centralized location, and I think that's just one of the cooler new features.
If you want to be on that path to financial freedom, whether you're here or gone, what we'd like you to do, if you're one of the next few callers, is give us a call. And if you have at least $200,000 saved for retirement, my son and I will run for you our total financial master plan. Now, there's no obligation and there's no cost. And if you're one of the next few callers, here's exactly what we're going to do for you. We're going to analyze and break down your latest tax return. Not us, but our CPA partner, who's going to make sure you're utilizing every tax benefit that's allowable under today's tax code. Secondly, we're going to review your legal situation. We're going to look at your estate plan. We want to be certain that your estate plan is not an IOU to the IRS. Many of us right now are still sitting there without a will. Some of our children don't have wills. Let's help you to help your family get on that path to having an estate plan where you can transfer your wealth with the least amount of government partnership. And lastly, we're going to look at all your investment statements, regardless of where they're held. And we're going to break it down into our famous investment analysis spreadsheet. Now, this is a simple 3-page document that compares apples to apples. It shows how your portfolio is performed. We're going to look at the income that your portfolio generates. Be certain that you're maximizing and optimizing a more dependable cash flow. We're going to look at the fees, not just the obvious costs, but the hidden fees that are buried deep in that insurance contract or in that prospectus that you received when you bought that mutual fund, or the additional prospectus where all the extra costs are hidden. And we're going to look at diversification. We want to make sure that you're getting the return for the risk that you're taking in your current portfolio. And lastly, we're going to tie it all together into one total financial master plan, which will answer the age-old question: are you going to outlive your money, or will your money outlive you? Utilizing strategies that we've been perfecting now for over 4 decades. We want to help take your family from your personal point A to your dreams, to your goals, with the least amount of risk and as much certainty as any fiduciary can provide.
So don't waste time. Give us a call at 844-PLAN-NYC. That's 844-752-6692. If you have over $200,000 saved, thank you, Ron, and you're one of the next few callers, we'll run the full review at 844-PLAN-NYC. That's 844-752-6692. Don't waste time. Get a second opinion today at 844-PLAN-NYC. That's 844-752-6692. This is No Pain, No Gain Financial Radio.
Your personalized path to financial freedom awaits at Payne Capital Management. For more information, go to BeBullish.com. That's BeBullish.com.
Here's this week's Spotlight on No Pain, No Gain.
It's Ryan Payne, Bob Payne, No Pain, No Gain. And as you probably know, Bob and I's main focus is education. We like to filter through all the noise every week and just make sure that you're getting the best advice when it comes to whatever you're doing with retirement planning and your investments. And one of the biggest decisions you're going to make, again, is Social Security. It's a really critical one, and there's so many ways to take Social Security that Bob and I have put together for you the guide to maximizing your Social Security benefit. And if you want to get a complimentary copy of that, you can text to 555-888 the word bullish in the text message space. That's BULLISH. So simply text to 555-888 the word bullish. That's BULLISH. Send the message. You'll get a response email back, and click on the link, and you can get your copy of the guide to maximizing your Social Security, just to help better inform yourself and make better decisions about, again, what income streams you're going to have in retirement. One more time, text the word bullish to 555-888. And it's time for our Spotlight segment. Like every week, We dissect a real financial plan, and we uncover the flaws, or what we call pain points. That's P-A-Y-N-E, of course. So you can avoid the same mistakes with your own planning and investing. And to help us this week, we have our star financial advisor, our favorite financial friend, Frankie Lagrateria. Good morning, Frank. How are you? That was a long intro.
Good morning. I know. I feel like Daenerys Targaryen.
A Game of Thrones reference. I like that. Right here on No Pain, No Gain. Well, you worked on a case this past week, so why don't you give us the rundown and some mistakes this couple is making with their financial planning?
Yes. Okay. So I worked on a very interesting case, and what really struck me with this one was, I noticed this with a lot of my cases, is that people don't have an issue obtaining wealth. This man has a great salary. He's saved in his 401k. He's done a great job saving. It's just the transition that now that he wants to retire, it's the preserving the wealth that what keeps, me, Bob, and Ryan employed. And that's really what a big focus on this man's case is today, is that, he's done a great job saving. He's done a great job, obtaining the wealth, great salary, all things covered. But now it's the obtaining the wealth, being able to preserve his capital and use it throughout retirement and be able to, inherit some to his kids.
Well, what were the pain points, Frankie, in this individual's portfolio?
Well, some of the pain points, one is a high cash position. So like I said, man has a great salary. He's done a great job saving, but he's been saving it in a checking account, which, as we know, is getting us
0.0%.
A penny every day.
Hey, a penny a week. Yeah.
A penny every year, yeah.
Enough for that 15 cents in a year. You can maybe buy. Now you can't afford to buy a gumball machine anymore.
Not even.
And that's something we see very often. Is right now specifically is money, big sums of money sitting in cash that you might not necessarily need, but you've been, let's say, slow to get that money invested and earn some income on it.
Yeah, absolutely, and. The way inflation's going up, if you have such a huge part of your assets just sitting there in cash, you're actually losing money. So that was one of his big pain points, was that, we need to talk about getting some of this cash invested. Another aspect was that he knew this. He came up to me saying this: I am way too heavily in the equity markets. I need to get some bonds, but I just don't know how. So I was like, well, I'm your girl.
Talk to me.
Yeah. So, I took a look at his portfolio, and he was right. He has a lot of money in the large U.S. companies, large companies in international as well, not taking advantage of, small mid-cap companies in both, domestic as well as international. And then furthermore, he was right. He did need to, spread out some of that risk. He's, looking to retire in the next couple of years, so we need to get him into one of those investment-grade bond portfolios.
Well, I think, one of the things that might be confusing if you're listening to us right now and thinking that you have a lot of cash, cash it's a relative term. A lot is a relative term. But in this individual's instance, he had 25% of their liquid portfolio in cash, yielding zero. So by, redeploying that money into a diversified institutionally priced bond portfolio, how much more income, Frankie, were you able to generate for this individual?
About $25,000, about $25,000 a year, which is
wow.
No chump change.
Not at all. And what difference does that make in terms of their retirement strategy?
It makes a huge difference. Right now, because they have that low current income, they're definitely pulling from their portfolio and having to sell things. With having this generated income of almost $40,000 a year just from holding your strategy, not saying the market moves, that's going to supplement his lifestyle come retirement when his salary is non-existent and he doesn't have a pension. So it's really going to supplement a lot of his costs and his expenses.
Mm-hmm. And what about, so the portfolio, that was fixed, that was an easy fix. You could, get them more well diversified, generate, a stream of income that will go up over time. But what about their estate? Was there any issues with his estate plan?
Everything was perfect except for one little thing that could have made a big difference. So he did not have his one section of his power of attorney initialed. And because of that, and nothing huge, he doesn't need to do it in front of a court of law. He doesn't need to do it in front of a witness. He just needs to initial it at home, and that can make a huge difference when he wants to start using his gift riders.
So he spent a lot of money to have an estate plan, and the lawyer forgot to tell him to initial the document.
That's why it's so important to have your estate docs reviewed once in a while, because we find those little mishaps and things that get forgotten. And again, like not signing your will is a big deal.
Yeah. Especially now, Rye, with our new portal, everybody's going to be able to store their estate documents in their vault. And we're going to be able to review them to make sure that these little details are taken care of.
Yeah, because these little details can be big, big things, especially when you're talking about the estate plan.
Oh, yeah, absolutely. So all he has to do is throw 2 letters onto his documents, and they're golden.
Well, great job, Frankie, just making sure that this person, again, is going from... He did a great job on the wealth accumulation side, to your point, but getting his portfolio retirement ready or ready for wealth distribution, just great recommendations here, and nice to see that you're setting him up correctly. So well done. It's always good to be one of Frankie's financial friends. And if you're thinking to yourself right now, I need a financial friend like Frankie, we all do, here's your shot to get a full review to make sure that everything is up to date and set up correctly for you. If you're one of the next few callers, we have a couple slots left, and you have over $200,000 saved for retirement, we will run a total financial master plan just like this, just for you. So that means looking at taxes. Can you optimize or reduce taxes on your portfolio? We'll have a CPA review last year's tax return to make sure you're not paying unnecessary taxes. We're going to look at those wills and trusts. We have an estate planner that'll take a view. Anything you set up 10 years ago, it's time to have it reviewed. Is everything initialed correctly? What updates, what changes do you need to make your estate plan? We'll point those out. And then finally, bring in all those statements, all those cash accounts, all those 401ks, IRAs, insurance policies, brokerage accounts. We're going to take them all and put it on a simple 3-page spreadsheet, our investment analysis spreadsheet, and we're going to look at diversification. Do you have too much money concentrated in too few areas? What pitfalls you have in your portfolio? We'll point those out for you. We're going to look at income. We're able to increase this retiree's income by literally $25,000 a year. How can we help you increase the income on your portfolio to make it retirement ready? And we're going to look at fees. What underlying costs, what hidden costs are you paying on your portfolio? We're going to point out all the fees to make sure that your portfolio is not being overcharged. And then we're going to tie it all together just like this into a total financial master plan. And we're going to determine, is your money going to outlive you, or are you going to outlive your money? Utilizing strategies now myself, Bob, and Frankie have been working on for literally over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
We want you to be a success, so give us a call at 844-PLAN-NYC. That's 844-752-6692. If you're one of the next few callers and you've saved over $200,000 for your retirement, our team will run for you our total financial master plan. No obligation, no cost. Just call us at 844-PLAN-NYC. That's 844-752-6692.
Well, another great show. Frankie, as always, it's an honor and a pleasure to have you on the show.
Thanks for having me, Ryan. Thanks for having me, Bob.
That is
Great
Frankie.
to have you, Frankie.
Frankie Lagrateria, our star financial professional here at Payne Capital Management. Well, have a great rest of your Labor Day weekend, and as always, be bullish.
Information provided on today's show is provided for information purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with an investment, legal, or tax professional before taking any action.